Good morning, everyone. Welcome to our Friday morning session, TGIF and all that. The markets just opened up to a rather big gap lower. Well, yeah, I guess it is a pretty big gap lower. Let's take a look here where the market left off. They finished the session around here somewhere, around the 43.70 mark. And we're opening way down here around 4,300. So a rather large decline so far in the NASDAQ. We'll give them a few minutes here to see whether or not they're going to try to trade back into that gap. All right. There they go. They are trying to get into that gap a little bit. All right. There's actually quite a bit of movement today, certainly relative to what we've been seeing. The NQ making this little bit of a rally up. Soybeans falling off somewhat. Let me bring over a soybean chart here. It's a little bit late to get in on this move because it happened here in the overnight session. But here's the open. You can see how quiet soybeans have been the last few days. Just looking for some sort of direction. I guess like a lot of the markets really. But it looks like they may have settled on a direction now as the market gets a little bit more bearish. Now, ideally what you want to see when you get a market that's making a channel type formation like this, Ideally, you want to wait for a little bit of a pullback and maybe a chance to buy, or pardon me, sell a little bit higher here in this range. It's not to say the market can't go lower from where it is. It's just that the more predictable sell signal is going to be coming up here near the top end of the trading range. So just a little something to keep an eye out for on soybeans. Not sure we're going to get a signal out of them this morning, but there you go. Do a little bit more housekeeping here while we wait. Did get a first micro macro cross signal here, or pardon me, a macro pullback signal out of the open. And that's looking like it's having some fairly decent follow through to it. Yeah, everything's a little lopsided this morning. Jim's sending me some numbers here. The advanced decline, terribly lopsided, only 220 some odd buyers, 2,100 sellers, nearly 2,200 sellers. So that's like a negative 2,000 with a negative 675 tick. All that's very bearish. I think some of that might be stemming from the overnight. Okay, this is interesting. So we've had this little bit of a run up now in the NQ here in the Hawk. Notice we've had a couple clusters here of yellow bars and macro pullback signals, and now we generate a red bar buy, which, as you know, we can use as a counter trend signal. The nice thing about using it as a counter trend signal at this point is that we would be able to cover the trade above the high. Oh, but here they come with yet another first micro macro cross. Oh, and that's back into yellow bars, so I don't need to worry about it too much. I am going to put a runner on today. All right, so there's our range. We've now had our test of the extreme. Of course, what time is it? Oh, it's about 10 minutes into the session. All right, we'll see now whether the bears will actually make an attempt to push below this swing low that's right here. Oh, they made an attempt and the buyers are jumping all over them. So we've got another first micro macro cross here. Thank goodness that one's moved into yellow bars. Okay, we've got a lot more serious selling going on here at this level now, and you can see here by tools like the Falcon, see with the dynamic equivolume bars, we can tell by the width of this bar that there was a whole lot of selling going on here. Wow. Okay, I have to say the buyers not willing to give it up. Looks like we're going to see a little bit of a rally here still. Our Geiger counter, look at how it's waffling here. It was full on green here, well, red, then green, then red. All right. All right, so here we come with the red bar buy signal again. No, not yet. Oh my gosh. Wow. Okay, a couple of A couple of questions here. Excuse me. Tony, pardon me, I got a frog in my throat. One sec here. All right, this is interesting what we're seeing here. Tony is asking about the width of the bars, why some are wider than the others. This is the dynamic equivolume bars. This is a new feature from Indicator Warehouse. Equivolume, if you've never heard of it before, it was developed by a trader by the name of Richard Arms. You may have heard of the Arms Index, also known as the TRIN. Anyways, he figured out a way to incorporate volume visually into your chart. You know how normally we have a volume graph at the bottom of your screen. Where's volume? There it is. Ooh, I should have picked a different tool than the Raptor. Raptor always takes so long to load. There we go. So you have your volume bars down here if you're watching your volume. And that's all well and good, but the volume bars can be a little bit difficult to interpret. So what he did is he made the bars wider or narrower according to how much volume there is. So you can see these bars that are wide, they have a lot of volume associated with them. And the bars that are narrow have very little volume associated with them. So you don't even need to have volume on your chart. You can tell from the width of the bar whether there was a lot of volume or a little volume. Volume is important because volume and price are really the only two things that are real in the chart. Everything else is man-made, so to speak. So we can see there was a lot of selling going on here by the width of the bars, and then they came back here, poked through, and the buying seemed to have dried up. And now we come back down here and they're trying to press the sellers. We'll see if we can't get into a sell trade here. Now notice how there's more participation here at these lows this time. All right, and here we come with our first micro-macro cross signal now. And we're down at these lows down here, but notice this little level right here, and the market's going to run away on me in a second. I do intend to sell this. But notice what happened when we broke this support level here. Notice how we had a little bit more market participation. So that's encouraging. That makes me think that the market will stick to this breakout. The problem with the first micro macro cross like this is the test of the extreme, right? We need to see the market ideally test the extreme before heading much lower. Okay, so now we're on this level here. Let's see how these bars form. There we go. So notice the width of the bar here. That told me that there was a lot of market participation on that breakout to the downside, which is why it went down as quickly as it did. Okay, it looks like we're going to get a test of the extreme, maybe a macro pullback in the hawk, maybe a rule of three signal here in the eagle, a hard edge bounce on the raptor, and a trend change signal on the falcon. So everything is starting to sync up a little bit better. All right, here's a trade now in the Raptor. Going to get a similar trade in the Falcon also. A couple more questions here about these equivolume bars. No, I'm sorry, they're not available yet. So I get to play with them, but you don't. Sorry, I know that's not nice. They will be available soon, and of course, Adam always makes this stuff available to you guys first. All right, so our warning dot disappeared there. Oh, there it is. It's back. And now we got a chance to sell on a move below those lows. And I guess I'd better think about putting a stop strategy in play. Still don't have a real test of the extreme, so I'm a little bit leery. I know there's a monster stop way back here, but what I intend to do is just keep it out of harm's way until the market has a chance to move a little bit lower. Or if it is going to come back here to the hard edge, I don't want to be stopped out just as it comes into the hard edge. Tony has part two to his question. I would also like to know, out of soybeans, NASDAQ, mini Dow, and crude oil, which ones produce the least volatility? Well, the least volatile of that assortment is probably the mini Dow, followed closely by soybeans, then the NASDAQ, and last, or the most volatile, would be crude oil by far. Now, you wouldn't know it from crude oil of late. Crude oil of late just kind of very sluggish. Here's crude oil. And you can see not a whole lot going on in crude this morning. The market opened right about here. Pretty sideways overall. The big move came in the overnight. A little bit of a sell-off. But crude, well, actually, yeah, right now crude isn't so volatile, but it is difficult to trade because the ranges are a little bit smaller. But the signals are still reliable. Here's a late filter entry signal. Problem with crude is the tick value makes it a little bit more difficult to cover. Well, with a smaller account, I should say. That one would have worked out just fine, though. Here we are with a trend change signal in crude right there. But you see, I can't cover it above the swing high with my account. Whereas if this were, yeah, see, I can't do that trade. I'd have to frame it a little bit tighter. Whereas if it were the YM or the NASDAQ or something like that, I could probably easily cover a swing like that. So that's the problem with crude. I'll tell you the truth. The reason I feature crude in the room is because so many people have asked me for it. It's not a market I am particularly fond of. I'm of the opinion that you don't need to trade a lot of markets. Certainly no more than 4. And if you're going to trade a variety of markets, you should pick markets that are unrelated. So for instance, the NASDAQ and the YM and the E-mini and the Russell and all these stock index markets, they're all going to move more or less the same way. But if you toss in a market, say like soybeans or wheat or something that's unrelated to the index or currency markets, it's going to move a little bit differently. Likewise, you could trade something like the British pound. I like the British pound. It makes some pretty crazy moves sometimes, but the British pound is also one of these instruments it trades only at 6.25 a tick. So it's certainly more affordable in case things go poorly. The thing with soybeans is they do tend to have good follow through. Once they pick a direction, they tend to stick with it, which does make trading a little bit easier. All right, here on the Geiger counter, you're going to notice we have one of these little spikes, this little island of buying that probably occurred right here, more or less. Okay, we're back into the hard edge. We could probably roll our stops in above here. If they fail at this point now, it's probably time to go. But this would be very reasonable test of the extreme. See if we can't get a little bit of selling going on in this market. You'll also notice that this current range looks a little bit like a bear flag. Oops. Where if we can see the market trade below this little channel that it's formed, might actually end up going somewhere. Okay, I'm getting a few other signals here. The Hawk and the Falcon still fairly strong, which is not entirely what I want to see. Yeah, there they come again. Those buyers. So we've got a rule of three type scenario here on the Eagle. It's actually only two signals against the hard edge right now, but we have had the test of the extreme. We've had a bigger test of the extreme here, but we've also had a little test of the extreme recently. We're currently trading against the ATR, so I'm not going to get too excited about shorting it just yet, but we'll see if it turns the ATR over. I'll probably try to short it. Yeah, Jim offers some good advice here too regarding market assortment. I tend to agree. Where a lot of times, because the markets have their own little personalities, sometimes it's to your advantage to choose a market, kind of learn its behavior, its little quirks, and then move on to another. Nuts, here they come again. No, they just red bar buy. This going to look back at this in hindsight and probably see the market put in a really big rally today and say, why did I not just buy it? So we're obviously not emerging out of this sideways range just yet. Where are we at here? All right. We've looked at a couple selling opportunities. Here we're coming with a buying opportunity that just skipped right past me as I was going to highlight it. So we've got A trend change signal, a little bit of a trend line touch here. The market comes back, produces a signal, and your choice would be, to take it above the high or to take it at the hash mark. Now, a lot of times when the hash mark is printing this close to the high, it really doesn't matter, because I found that if it fills me here, it's very likely going to fill me here also. Occasionally, it does not. It'll fill me here and then maybe reverse. But a lot of times, it's just a judgment call, really. Covering this trade, can I cover it way down there? Oh, I could too. And there you go. You can see we just hit our profit objective. So a little bit unfortunate. Oh well, the hazards of moderating a trading room, right? Sometimes you miss out on a trade. Oh, well done, Jim. Jim says picked up $525 on his puts. Well done. Well done. Nice way to end the week. Tony, good question here. Any advice on trading stocks by using the Raptor? Any advice would help. How do you select the stock for day trading? That is the biggest problem I have with the stock market, Tony, is how in the world do you choose the stocks? There's, tens of thousands of different stocks available. How do you choose one to trade? Well, first let's deal with the easy part of your question, or the easier part, regarding the signals. Well, with the Raptor, a lot of times this first trend change signal is going to be a very high probability signal for you. You're usually going to encounter a cloud crossover if you're mapping both clouds. And you're going to see some support. Another good signal is the double pullback signal, of which I'm not seeing one lately. Well, this one failed, but this is what it looks like, is where the market makes two moves into the hard edge, comes out, and produces a signal. Your signal is right there. Unfortunately, this one didn't have very much follow through. The good news is it did give you a chance to tighten your stop a little bit. So had you entered here, you would have been stopped here, or, depending how you managed your position, it would have inflicted a little less pain than if you had your stop back here. So that's a double pullback signal. A lot of good discussions on the Raptor trading forum. So if you're not currently at the Raptor trading forum, send Adam an email and he'll give you the information about how that you can get onto the Raptor trading forum. And for those of you who are interested and not currently at the Raptor or DTS forums, I'll send you Adam's email address so you can request access to that. It is a closed forum for Raptor and DTS owners only, although I don't know why anybody else would be interested in attending, because we're just discussing signals and that kind of thing. The hard edge bounce, Ricardo has been focusing a lot on the hard edge bounce, among others, and it's had some very good follow through. This one could be considered a double pullback or a hard edge bounce, however you want to see it. And this one did have some very nice follow through off of that. So that's the first part. You're going to want to concentrate things like the trend change signal, the hard edge bounces, the double pullbacks. Finding a stock to trade. Well, I'll tell you that's why I focus on the futures, why I focus on the indices, because The stocks, there's just so many. A lot of people just pick their favorite. I suppose they're divided between the real stocks and the penny stocks. The real stocks, the SPY is great. Hold on one second here. Let me get another Raptor chart built. The SPY is a pretty good market, and we'll just let that load. The SPY, of course, is the ETF version of the S&P, or the stock market version of the S&P. The nice thing, of course, about trading stocks or ETFs is there's a lot of brokers, there's a lot of deals on commissions. In the futures world, your choices are a little bit more limited. So here's the SPY, and you're going to have to get used to the numbers. Like, look at the number of shares being bid and asked. It's just huge. But a good learning ground, an easy way to get in, just doing onesies, twosies. You're not going to make any money trading that kind of volume, but you're not going to lose any money either. As far as the smaller value stocks, this is Sirius Radio. We'll let that one load. Oh, okay, not enough. I don't have enough days in here. Or it's not, why is it not displaying right? Anyways, there's a lot of penny stocks available. You can see that are trading for, less than $5 a share, which certainly makes them a more affordable market to trade. I guess at the end of the day, it depends on your bank account. Like if you can afford to trade Apple, you might as well trade the futures. You might as well trade the S&P and stuff like that. Because we'll get Apple loading here in a second. What's Apple at? 113 a share. You'll still get some solid signals. See, here's our, oh no, where's our trend change signal? A couple very nice hard edge bounces. This was just crazy at the open. I don't think you'll be able to trade Apple on the open, at least not at 8 ticks. You may have to increase the bar size substantially because you see how that unfolds. This all happened in the matter of seconds. I haven't watched the Apple much, or Apple on the Raptor, but right now it looks like the tick size is fairly responsive. But what I was going to say is if you can afford to trade Apple at 113 a share, again, you're probably better off trading the NASDAQ or the mini Dow. You're going to get a little bit more bang for your buck. Apple is now part of the Dow anyhow, so it's not like it's going to move too terribly far from what's going on in the Dow. And then you got stuff like Facebook, which is another more expensive stock. But yeah, that's the problem. Stock screeners, right? How do you find out of the tens of thousands of stocks to trade, one to find? And here Facebook also hovering near $100 a share. Mike Filigera, he might be a good fellow to ask. But I'll tell you, Mike trades a monster account, so you know he's okay trading these stocks that are, you know, he trades stuff like Tesla and Apple and stuff like that. So not for the faint of heart. I don't know if that helps much, Tony, but yeah, that is one reason I've always gravitated toward the futures markets. Currencies are great too. Like I say, you can't go too far wrong with something like the British pound or the euro, especially if you're in a time zone that's closer to the European time zone, or if you're an early riser. All right, well, here they come again. Now, I know I've attempted to sell a couple times this morning and I got burned each time, but here's a first micro macro cross and I can cover it right above there. So I'm going to leave this one. In this case, I'm going to leave the stop up here. I got a lot going on this morning. I'm going to cancel the break-even trigger here at the moment, just because we haven't. It's hard to say right now whether this little blip up here was the test of the extreme or whether we're going to get a bigger one. 43.30 is going to be problematic if we happen to get that low. And that's because it's one of our support zones. Working on a possible trend change signal here on the Falcon now, so we're getting a complementary signal on the Falcon. Had a soft edge sell here on the Eagle, or pardon me, the Raptor, this would have been a little bit more difficult to take. The soft edge sell is a counter trend signal, but usually we like to see it preceded by a test of the extreme, right? Something a little bit more definable This had a test of the extreme. It was a very small one, though. Just a couple of bars. Just a little zigzag right there. But it did work. The soft edge sell, we're just looking for a retracement to the hard edge, which we would have gotten at this point. This hard edge could give us a little bit of trouble. All right, well, they're fighting it out. So we're into a macro pullback phase now on the Hawk also. And working on a late filter entry here for our Falcon trade. Notice our filter has gone out of sync. So far our trend line has held, which is encouraging. And all we're looking at here is for the market to give us a test of the extreme before possibly heading lower. So this is kind of interesting here if you take a look at the bars. Notice how when we get back up to this resistance level, the bars get a little bit wider. That tells you that there's some active selling going on there. Active buying as well, but active selling also. If it were just a skinny little bar, it would tell you that there was very little selling going on. All right, excuse me just for a moment. I'm going to be right back. Okay, I'm back. Oh, these darn buyers. Look at that. Running the market all the way back up to the highs. Well, it's not my day today. I am a slow learner, let me tell you. I know how to make the market go lower. All I need to do is buy it. Oh, that's terrible. Yeah, there they go. You know, I find those are my worst days when I come into the market with a particular bias. It never fails. If you can't tell, I was looking to short the NQ in a big way today. And of course, that didn't work out. So, well, we got a first micro macro cross here. The market's working on a trend change signal here. I think we're starting to get a little bit range bound again, is what looks to me like is happening. A couple questions here. Jim says, yeah, you know what? Jim makes an interesting point here regarding correlated markets and such. He says he likes to watch the DAX, which is the European stock market, for a sign as to what might be happening in the North American ones. And there's nothing wrong with that. Very often, one will lead the other. Whether or not the DAX is always the leader, you know, is hard to say, but sometimes something will show up in one market that you may not see in another. The thing with the NASDAQ is that it's its own beast, right? It's going to make its own moves, and sometimes a larger market like the DAX will filter out some of that noise. So yeah, that might be an idea to watch the DAX in conjunction. I used to watch the 30-year bond for a similar reason, not so much to trade the bonds, but just to confirm what I was seeing in the stock market, because the bonds and the stock indices tend to have an inverse relationship. In other words, If the stock market is going up and the bonds are not going down, I would have a pretty good idea that the move would not last, and vice versa. Now, there were times that the stock market and the bonds both went higher or lower, so it's hardly infallible. But sometimes just having that extra little tidbit is helpful. So yeah, I might do that, Jim. Thanks for the tip. Jim also asked, Eric, do you only trade with the DTS system? When I'm day trading, yes. And obviously here in the demo room. For my end of day trades, well, DTS is a day trading system, so no. End of day trades, I use just a daily chart and just concentrate on the support and resistance areas, how the market is reacting. More of a price action type thing. But this morning is just my own fault, being a little bit flippant with the market, thinking that I know better than what the charts are telling me. It is, I don't know about you guys, but it is something that I've struggled with from time to time, today being a perfect example. I came into the market, where are you? Right down here. Saw this huge decline in the overnight. Sure, I was expecting a little bit of a pullback, a little bit of a rally. Here's the opening bell. We get a first micro macro cross. I didn't pay much mind to it. It's the opening signal, so I'm not really worried about it. Figured, okay, here's a little bit of a pullback. Okay, now the market's starting to settle down a little bit. Oh no, okay, not quite ready yet. Okay, still not ready. Okay, things getting a little softer now. Now we'll look at selling. Nope, not ready yet. And in the meantime, because of my bias, ignored several opportunities to buy. We did get this sell signal, but it was short-lived. And then the market comes back with the first micro macro cross, which again I ignored because I was bearish on the market, and it also ended up going higher, as did the next first micro macro cross, as did the macro pullback, and the list goes on. It happens. Uh, Let me load up the DAX here. Jim says the DAX is at a support level. All right, here's the DAX on the Raptor, and a little bit of a trend change going on in the clouds anyways. Keeping your composure in the markets is a big deal. If you find your composure is starting to slip, uh, stop trading that day. You'll be better the next day. You don't have to give up trading entirely, or move into sim mode or something. But sometimes it's just so difficult to wait for the right opportunity. And yet, that's our job description, isn't it? Major crossroads where we're at right now. This whole 43.30 to 33 region. This is huge for this market. And it looks as though the sellers might be pressing the buyers a bit. So here we are, 43.30. We eventually got there, not quite the way I thought we would, but here we are, 43.30, finding a little bit of support. Jim says the DAX is firming up a little bit. We'll see whether or not that gives us any support for the buyers here on the NASDAQ. Okay, working on a possible 4-arrow consolidation here in the hawk. 1, 2, 3. The fourth signal tends to have some follow through. Now I know I have had zero luck shorting the market today, and there's another sell signal, but there you go. Okay, I'll let the 4-arrow consolidation just sit there a little bit longer, but it doesn't look like it's going to trigger. Not yet anyway. And we're working on a trend line touch here in the Falcon also. So a couple of signals. Can I cover that? Yes, I can. Like I said, this whole zone, very difficult right now. Markets really sensitive to this 43.30 area. We'll have to make a note of this one because I bet you next week this number is going to be influential again. Okay, our hawk has since moved into a macro pullback type situation. And if it gets any higher than that, there we go, it's into yellow bars. Which is suggesting that it's really not going to head lower right now. So our trend line has also moved out of sync here. If it comes back into sync, well, actually, I can leave the order there just a little bit longer. No, now it's really out of sync. I thought maybe we'll get a late filter entry signal out of that, but not at the moment. So we'll leave that alone. Ay, 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 ay. There's not very much structure here this morning either if you take a look at the Eagle. Yes, it's broken the lows. We should anticipate actually the market to turn a little bit more bearish now, but we haven't had a test of the extreme, have we? So ideally, I'd like to see a little bit of a rally here, let the market get up some, and then turn and head lower. That would be something with a little structure to it at least. All right, trend change signal here on the Falcon. It's looking a little bit more bullish than some of the other tools at the moment. Only good thing about this signal is that we can cover it below this swing low and this whole 43.30 line, which we know to be a little bit sensitive. So with the trend change, we get the up. This is the down. We'll see if they come back with another up signal. There they go. They're trying. So you can either go off the original signal, which is what I did, or you can see we're still printing warning dots. The next signal is going to print above the high of this bar right here. Come on, keep going. Let's get going. crude oil a little bit more bullish than what we were looking at. They finally got out of that sideways range that held the market for the first hour and a half of trading. Gave us a little trend change signal here, another trend change signal here, and then they finally stayed outside of that range and put in a little bit of a rally. Okay, so the seller's trying to fight it back. We should see the buyers try to step in here if in fact they're going to support this whole 43.30 zone. All right, they're trying. Okay, so here comes the buyers. They're pressing a little bit. Getting a reversal signal here on the Raptor. So we've got the failure. We've got a chance to buy the Raptor higher here. And we can cover the trade, say, below the swing low. Where are you, swing low? bit of follow through. Oh, don't you dare. Don't you dare stop now. Oh, man. It's just the way the whole day has been unfolding. Okay, so the Raptor trade almost to our break-even trigger. Come on, get up there. Come on. There you go. You can do it. All right. So at least the Raptor trade is to break even. Get up there a little bit. The Falcon trade, not quite to our break-even trigger yet, but I would probably roll at least below this bar here with the tail on it. Just the way the market has been today. Oh, well, what do you know? Hooray! We had a profitable trade. Oh my gosh. Some days, folks, some days it's just painful. All right, our Raptor trade, we still got a runner in play here. And I think I'm going to go with the parabolics. There we go. Just to protect whatever open profit I might end up accumulating with that. But this is probably a good spot to close up the session. I don't think we're going to get a whole lot more going on right now. The market's gotten considerably more bullish than it started. I don't know. I guess it does look like it may continue higher. It's a very choppy day today. Not what I was hoping for to close out the week, but you get what you get, right? So if you're trading this afternoon, I guess the bulls have been paying off, so you should try to stay to the buy side. How much higher they're going to get? I don't know. There was a little bit of gap out of the open. Maybe they'll see 43.70. That would fully cover the gap. That would be a huge, huge rally by the buyers. All right, you guys. I'll see you Monday. Hope you have a wonderful weekend. I'll talk to you then. Bye for now.